Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. Back with his good friend, Mr. Dan Bird. How you doing, sir?
I'm doing very well. How about you?
I'm doing well, man. So episode one, we kind of looked back at last week. We got a lay of the land. We've talked about a reverse or inverted head and shoulder. We teased him at the very end of the video about a stock that you may look at. You're not an advisor. All of those great things. But let's get into next week. Next week, we have I don't know, Super Bowl power important number called CPI, the
Yes.
headline number. Last, just to level set, 9-1 was last month. Expectations are 8-6,
8-7.
8-7, sorry, 8-7. And Dan Bird, the one and only, is calling 8-3.
The Dan Burr, the one who doesn't know anything, that doesn't know
Yeah.
what he's talking about, and may often be wrong.
And has been wrong the last two times on inflation.
Yeah.
So
I thought the 8-6 was going to be peak inflation.
yeah, exactly. So let's look at next week because the setup's important. I think Friday kind of ended kind of weak. Monday and Tuesday are gonna all be kind of people just playing or trading. But Wednesday morning, what's going on in the market? What's the setup heading into the week?
Yeah. Let me show my newsletter first, because that'll kind of lead into the other discussions. So I do a newsletter on Saturdays. I do a lot of my own research, and I put some of it into an email that I was sending out to friends and family. There's no charge for this. It's just my opinion. I'm not a financial advisor, so it's strictly my opinion. You can agree with it or disagree with it. Doesn't matter. If you agree, send me notes. And if you disagree, don't say anything.
I like that. That's funny.
But send me an email to breakpointtrading@gmail.com. And I'll add you to the list. And if you ever get tired of it, just let me know and I'll take you off the list. No problem.
Perfect.
So let's talk about Friday. I put these two charts in the newsletter as well. These are the performers, the sector performers, and I want to talk about sectors and industries in this session as well, and show folks how they can find some good stocks inside of sectors and industries.
Okay.
So anytime you do research, you should start with the widest view. What's the overall market doing? We talked about that in the last session. Actually, it's obviously going up. It will continue to go up. Anybody that says that this is a bear market rally, it's going to go back down, is wrong. They're going to miss the rally.
All right.
We might have a retracement like we talked about last time, but the market is absolutely headed higher.
So on that note, I think the last time I asked you this, you were about 60% invested.
Right.
Or what are you today?
Today, I am probably about 10%.
Oh, I did not know that was going to go that way. Okay.
Yeah, right. But I don't know which way the CPI number is going to go.
All right, so you're flat till Wednesday.
Yeah, just like a lot of traders probably are.
Yeah, that makes sense.
I'm flat until Wednesday.
Okay, I like it.
Now that means I could miss out on some profit.
Of course.
Right.
But you also you're controlling the downside.
That's right. Controlling my risk. That's what it's all about. Controlling risk.
Okay.
That's what all of this is all about.
Yeah, everything.
In fact, all of our conversations, our discussions, the newsletter that I sent, it's all about controlling risk. It's trying to gain knowledge so that you can control your risk or limit your risk, your downside risk. At any rate, this is last week's sector performers. So this is a 1 week view. And you said in the last session that Friday kind of went down on Friday, which is true. We did. I'm going to show you just the Friday's view. So look at this last week for the week. You can see the outperformers. The top 3 outperformers are the top 3 aggressive growth sectors.
Got it.
Technology, communication services, and consumer discretionary. Those are the top 3
for the week.
For the week, aggressive.
Yeah, growth. Yep. The
Fed
pivot. The Fed pivot. That's what that is.
Industrials, a lot of times, are also growth sectors. They're sort of borderline. I'd say neutral. I call them neutral. Utilities is usually a defensive sector. but it still outperformed the S&P last week for the whole week.
Mm.
And you can see the underperformers down here. A lot of those are defensive. Real estate, consumer staples is the one of the big defensive sectors. Energy continues to underperform.
Well, yeah, oil goes from 130 to 90.
Right. Yeah, oil is tanking. So energy, which was doing really well at the beginning of the year, is underperforming big time. But let's look at what happened on Friday. So keep all this in mind. So here are the sector performers on Friday. Now all of a sudden energy's back at the top.
Yeah. And
technology, communications, and consumer discretionary are at the bottom.
That is the Fed pivot going, oh no, not September, later.
Yeah, that's the jobs number. Came in twice as much as expectations.
Hotter than any estimate out there, even higher than mine. I was in the 300s.
Right. And the rate went down to 3.5%.
I saw that. Yeah. And again, as you've talked about a lot, unemployment typically bottoms at the beginning of a recession.
It bottoms before the beginning.
Before the beginning, sorry.
When the recession starts, the unemployment rate has usually been rising off of the bottom for about 3 months.
Got it. Okay.
So it's not when it bottoms, it's after it stopped bottoming and it starts going up.
Reverses. Okay.
That the recession starts.
Okay.
By the way, that's also true of the Fed rate hikes.
Yeah.
Recessions don't start when the Fed starts hiking rates. The recession starts when the Fed stops hiking rates or starts to lower rates. That's when the recession starts. So we're not in a recession yet. Okay. As much as everyone wants to use the 2 quarters of GDP negative growth, we are not yet in a recession, and the jobs number should have pointed that out.
Yeah.
But this to me was really interesting. What happened on Friday, and a lot of it is related to that jobs number.
But I think so. I think this is going to be carryover Monday, Tuesday until we get. Wednesday's going to Wednesday validates the hot jobs number, meaning hot CPI, or it goes, okay, that was an old number. Jobs is a lagging indicator. The Fed's job is working. Wednesday's going to be crazy busy or crazy exciting.
Yes. Wednesday will be very volatile one way or the other.
And that's why you're flat, because you don't know.
Yeah, because I don't know.
Yeah.
I don't know. We could get a 9.3 number.
Yeah. I actually have people on my channel guessing 10.
Yeah. We could get a 10 number.
Yeah. Who knows?
Or we could get a 7 number.
Yeah. Who knows? Agreed. It could go either way. Yep.
So, why I'm not a gambler.
No, you go flat. Yep.
I'll take all my chips off the table and see what happens. Yeah, I will miss part of the
Will you be at your computer Wednesday morning ready to trade at the open if you get what you want?
The number won't come in it comes in at 8:30. So I will have everything ready, and I have stocks that I know that I will probably buy.
So you have a shopping list ahead of time.
I have a shopping list.
You know the price points that you will pay.
We're gonna talk about how to create a shopping list here in a second.
Okay.
But yes, I have stocks that I would like to get back into that I got out of last week.
Right.
At a profit. So I've taken my profits, and now when that number comes out at 8:30, the market doesn't open until 9:30. If it comes in at 8.3 or 8 or even
below 8.3,
even below 8.7.
Okay, below 8.7.
Even at 8.7 for that matter, the market may just take off.
And again, just if you haven't watched video number 1, even if headline comes down but core goes up, you think the headline number is enough to send the market?
Yes.
Okay.
Yeah, and I will definitely scale into my positions.
Okay.
I'm not going to buy everything. I'll buy a half a position or even maybe a third.
So let's play the other side, because that's, if I'm reading your body language, that's the setup for you. You think it's going to come in at or below expectation, and then you'll ladder into positions.
Right.
Let's play the other angle. Let's say it comes in at 9.3 and you peak inflation is still can't be called.
Or 8.8 or 8.9.
Yeah, anything
or 9. Anything above 8.7.
Okay. So let's say it comes in higher.
Right.
I actually, you know what? No, I want to say it comes in higher than 9.1.
Okay.
That way peak inflation is off the table.
Right.
What do you do then?
Then I wait for that right shoulder on the inverted shoulders.
Okay. So you could be days away.
Right. So then I wait for 39.50 or 4,000 somewhere around there. We
Gotcha.
talked about that on the last show. So
makes perfect sense.
I would actually like to see that right shoulder form.
Okay. I like it. All right.
Because if it does, then I know we're going to 4,700. I mean, I think we're going there anyway.
I love the confidence.
Yeah.
This is why I am not a stock guy.
And then this last one here is a chart that I came across that I thought was interesting. This is an 18-month projection of M2 money supply.
Yeah, this is really interesting. I saw this on your chart. I'm like, dude, I got to ask you about this. Again, folks, I get his newsletter. If you're not getting his newsletter, you're missing out. It's all about understanding risk. This one caught my attention last night when I was looking at it.
Yeah, and the projection for M2 is based, I think, primarily on quantitative tightening.
Oh, it's all QT. Most of that, yeah, most of that's QT.
Right. So M2 is liquid, or mostly liquid capital.
It's the velocity of money moving through the system.
Yeah, but it's money that's liquid.
Yeah, money is in. Yeah, money.
So money that's in savings accounts and money markets,
accounts, checking, yeah, all that.
Right,
stuff.
even short-term CDs.
Correct.
So it's the money that's liquid that people could actually spend.
Yep.
And quantitative tightening, the Fed's been going through quantitative easing for years now.
Yeah.
Really, even back to 2008.
Oh, it's since 8 for sure. QE. Yeah.
But since the pandemic, of course. They accelerated quantitative easing.
That I don't know, descending slope.
Yeah.
That cliff. I mean, what else could you call that?
Pretty steep.
That I've looked at M2. I think we are certainly M2 is certainly going to slow down, no question. That's a hell of a drop, though. The drop is equal to the acceleration, and I don't think they're going to ease as. I don't think they're going to tighten as quickly as they eased after the pandemic. No, there's no chance. No.
So that slope, I agree with you. I think that slope was a little too steep on the other side, but I do think it's coming down for sure.
Yeah, no.
That's something that doesn't get talked about much when the Fed hikes rates. People don't really mention much about the quantitative tightening that they're actually. September is when they're really starting it.
Yeah, well, I've been telling people on my channel, I don't really care about the rising rates. QT scares me to death.
Yeah.
QT scares me because the only time we've really ever tried it, 2018, we had the taper tantrum, stuff broke. And we're going to do it now. And dude, stuff's going to break. Dude, we've already seen some countries that have their dollar denominated debt blow up. Sri Lanka. We have Argentina going bonkers. This this QT thing, it is going to break lots of stuff. And I have no idea where it's going to break. The system is not set up for this. If QT drops anywhere close to this picture, all hell's breaking loose. That's why there's no chance it drops that fast.
Yeah, I don't think it will either. But it is an interesting.
It's going to go down, though.
It's going to go down for sure. So and you can see the correlation between the CPI and M2.
Yeah, I mean that's just another example of CPI or inflation is and has always been a monetary phenomenon.
Yeah, and I think that's the more important takeaway from this chart.
Correct.
Not so much the steepness of the slope on the other side, but the fact that it's correlated.
Everything post the peak is a guess.
Right.
But yeah, inflation, as I've shared on my channel, is a monetary phenomenon. You can't print $9 trillion, not produce anything more, and not get inflation. It's a if-then statement. If you do this, then you get that. It's that simple, and this picture shows it.
Yeah. Exactly. So I don't know if you want to do a third session.
Well, let's just get into the stocks. Let's just wrap this one up. People want to hear about the sectors in your stock. Let's give it to them here.
All right, that's fine. So what I do is I do a relative strength analysis of sectors versus the S&P.
Okay.
To try to identify sectors that are beginning to move up. And I just thought I'd start with the ARC versus the Qs.
I think that's fun. Yeah.
So you can see down here ARC and the Qs, and this one is a price performance chart.
Oh, interesting.
Which means we go back a year and we start everything at the same place.
Yeah, same place.
Right?
Yeah.
And then see how they correlate as the year goes through.
Yep.
And you can see over the last year, ARC has gotten further and further away from the Qs, and it's really not coming any closer.
No.
So this is the XLK. So this is technology versus the S&P. And this gives you a really good understanding of why we bottomed in June. The one on the top is relative strength index. That's always that's one you should have on every chart, I think.
Yeah, that's hitting the 70 number.
Yeah, that's hitting 70, which is actually overbought. So that's why we could have a little bit of a retraction.
Okay.
This one right here is, I put this on every one of my charts as well. It's basically a 65-day moving average.
Okay.
But if you look at a 65-day, it really is interpreted as a weekly trend.
Oh, I got it. Okay.
So even though it's a daily chart, this chart is a daily. By using 65, it shows me what the weekly trend looks like.
Okay.
And you can see starting, from first week of January all the way through beginning of middle of July, basically, the weekly trend has mostly been down below the zero line.
Yeah.
But ever since July, it's been taken off. And then this
Fed pivot, baby. Fed pivot.
Yeah. Well, this is the bottom. Here's the bottom. June 16th, right here. And you can see even before then, even back in April and May started the trend. So there's one data point. So you've got a trend higher right there in May. And then beginning of July, or actually middle of June, it confirmed the trend higher. And now it's accelerating big time. So technology is a good sector to take a look at because it's going up. Now we may get a bit of a reversal because we're getting close to the top. So that might happen, but in general, technology will lead the market higher.
Okay.
All right. So now we get into, this is actually software, and I think software is just getting ready to take off.
Okay.
Here very soon. So this is what the software chart looks like. And in this case, you can see ever since, beginning of January, actually middle of December, it started trending down in this channel, and it broke out of the channel just recently, just the beginning of August.
All right.
The software is just beginning to catch up with the rest of technology.
Okay.
So that I think that one there is going to have legs as we go into the end of the year.
Okay.
These are the relative industries. So the way I organize these, it's based on sector. So this is something that I look at a lot. So I can sort these based on percent change. So I can see which industry groups have been moving up the most in one day, or I can look at 1 week. So in 1 week, travel and tourism, media agencies, renewable energy. Keep that one in mind, renewable energy.
Yeah, solar.
So those are the ones for the last week that have been moving up. Gambling. Gambling is just starting to move. So that might be one to take a look at as well. Here's renewable energy. So this is the relative strength chart. Look at that.
Yeah, that's in phase telling folks that Europe's buying solar gangbusters. That's what that is.
Yeah. So there's a good one to take a look at. Finding stocks in renewable energy. So here's renewable energy. So in stock charts, it allows you to go in, and I'll actually show you how to do this. You can go into the dashboard. You can modify the dashboard any way that you want, but this member tools is always up here in the upper left. And one of these summary pages is sector summary. So if I click on sector summary, it shows me all the sectors and how they performed on Friday. Or you can look at 1 week, or more interesting is 1 month. Look at the sectors for 1 month. Discretionary and technology leading.
Yeah.
Those are aggressive leading sectors. All right. Then if I want to look at the technology sector, I can just click right here, and it takes me down to the individual industries within technology.
Okay.
And over the last month, semiconductors and renewable energy have been leading. And if I want to go to renewable energy, that shows me the top stocks over the last month that have been leading in renewable energy. There's Enphase right there.
There you go.
So you can sort these different ways. You can look at, price. This one here is only $1.11, right? So then there's a quick view of the chart. It's coming off the bottom 50 cents. So if you want to play, penny stocks, you could do it that way.
We don't recommend that.
Don't recommend it at that level. And the reason is, if I go look at this one, I open it in a new link, this one right here, you can see the volume, 620,000 shares. The average volume is 891,000. That's fairly liquid. A lot of times on these penny stocks, you'll find one has volume of 50,000.
Yeah.
All right. So if it's a $1 stock and the volume is 50,000, I could buy the whole volume in one day.
You'd move the market by yourself.
I could move that stock just by myself.
Yeah.
That's not what you want. Yeah. If you're going to play penny stocks, you should be looking at volume of more than 2 million in something that this low of a price.
Okay.
Because it's just too easy to push these around. Right. So these are the sectors here. If I want to look at Friday, see what Friday looked like. So just for the renewable energy sector, these are ones that people might recognize because these were big ones going into the end of last year.
Yeah.
So fuel cell, $4.15. Look at the chart down below. Just coming off the bottom. Yeah. Plug Power. Now it's already had a nice run, but coming off the bottom right there.
So am I going to guess that your stock you're looking at is in the renewable sector? Am I going to guess that correctly?
Yes, it is sort of in the renewable sector, but it's actually in the software sector.
It's software and renewables together. Okay, I got to know. I have no idea what stock that is.
All right, so here's my stock of the week. I don't know if we're going to do this each week, but I'm gonna show you this one because.
Yeah, I don't even a stock that is software and renewable. I have no idea what this is going to be.
STEM.
Okay. All right. Just tell me about STEM. I don't even know what STEM is.
I'm going to show you in a second what they do.
Okay.
But this is a friend of mine that he's typically a fundamental investor. He looks at the earnings and he looks at the fundamentals of the company, that type of thing. So he sends me a note probably when it was around here, 11 or 12, after earnings. And he says, hey, check out this company. I bought it below 9.
Oh, wow.
I'm like, great. Why didn't you tell me when it was below 9?
Yeah, exactly.
But I did. I took a look at it, and it's a very interesting company. So I'm not necessarily recommending, and I'll tell you what my strategy is going to be on this one, but I'm not necessarily recommending people go out and buy this right now because, look at the RSI. It's way overbought.
Right.
This is very extended.
Yeah.
The accumulation distribution is, look back here is probably where you should start accumulating. Back when the 8-day crosses the 21-day, that might have been a time to start accumulating back in here. But ever since the earnings, it's just taking off. So it's a little bit overextended for what I usually want. Right. Now it ended the day at 1445. So what I'm going to do is I'm going to use my risk calculator,
right,
and determine the total position, and then I'm going to take a third of a position,
at
1450.
Oh, okay.
So if it continues up on Monday, then I will at least be in. I'll be participating.
Okay.
With 1/3, and then I want to see what happens. So it could easily pull back down.
So if it pulls, just again how you set this up, so you're not going to put in a limit order. You only want to catch it if it races higher. So if it reverses Monday, you don't buy.
That's right.
Yeah.
I'm going to put in a stop order.
Right.
So the concept here is I want to participate, and I'll show you what this company does here in a second, and I think you'll understand why. I want to participate, but I don't want to risk a lot. Right. So 1/3 of a position if it continues higher.
Okay.
On Monday.
All right.
And then if it doesn't, I'm going to watch it and see what happens with it. See how far down it comes. And what I might do is, so this will be a stop buy order, not a limit not a limit buy. It will be a stop.
I want people to hear that, because some people hear you talking, they're going to put in a 1450 limit and they're going to buy it no matter. They could buy it either way. You're not doing that. You're only buying if it runs.
They put in a 1450 limit and it opens at 10. They're going to be buying it at 10.
Right. You're not doing that.
I'm not doing that. I'm putting a stop buy order in.
Yep.
Which means only buy it if it goes up to my price.
Mm-hmm.
So 1/3. Remember, 1/3 of my position. I'm not buying everything. And then I'm going to see what happens. Now, let me show you what this looks like on a long-term chart. This is a 5-year weekly chart.
Mm.
So you can see where it's been before. It's been up to 50. It's been to 35 before.
Mm-hmm.
And then it came all the way back down. But this is a fairly new company,
mm-hmm.
or newly listed company, I should say. It was started, just the end of 2020. So there's still room to go, and it's broken through both of these long-term moving averages, which is a good sign. Although Monday it could easily come back down. We don't know.
Right.
All right. But let me show you what they do. Under symbol summary, tells you what the company does. Builds and operates the digitally connected energy storage network. Provides solutions that address the challenges of dynamic energy market. Firm develops and deploys artificial intelligence powered energy storage that controls energy costs. Engages in combining advanced energy storage solutions with Athena, a world-class AI platform powered analytics platform.
I like it.
So it's advanced technology, which I like.
Mm-hmm.
Use it AI, which I like.
Mm-hmm.
It's basically a software platform, but it's actually it's sort of straddles the industrials, software sectors.
Very cool.
and technology too, for that matter. So I'm very intrigued by what they do.
Mm-hmm.
I'm intrigued by where the chart has come from.
Mm-hmm.
Their earnings were blowout earnings.
There you go.
Last week. But I don't know if it'll continue higher or not.
Yeah. Again, this is not advice, nothing here. Again, remember, he's not putting in a limit order. Be very, very careful how you do these things. Let us know.
And if nothing else, if folks just want to watch it.
Yeah, just watch it.
Yeah, this does look like an interesting one. I just want to see what it does.
Yeah, that's what I would tell everybody to do. Just watch it. Have some fun.
Right. And if for some reason it does come back, let's say it comes back to the 21-day moving average down here at 10. I mean, that might be an awesome entry point.
Maybe. Yeah.
If it does.
Yeah.
But
this is fun. Well, folks,
just an idea, take it for what it is and make your own decisions. I'm not suggesting people buy it.
No.
I tell you what my strategy is going to be. I might end up only with 1/3 and I might lose that 1/3.
Yeah, exactly.
Right away. So
yeah.
It may continue down. It might come down to 12.
Yeah.
And maybe I'll buy another 1/3.
Who knows?
Maybe it'll come down to 10.
There you go. Well, folks, do us a favor. Let us know if you want Dan to make a stock of the week a regular thing in our video number 2. Let us know if that's of interest to you. Otherwise, we will just stick to the charts and whatnot. Dan, can you show your newsletter one more time?
Sure. I almost said people can suggest a stock of the week, but that might get out of hand.
Yeah, that'll get out of hand. I'd rather have one person make the choice. That's you.
Yeah.
So, folks, if you're listening on the podcast, it is breakpointtrading@gmail.com. You need to get it. I get it. I read it. I looked at it. A lot of good stuff here. Dan, thank you very much.
You bet. Have a good weekend.
You too. Take care.
Yeah.